Welcome to TradeTheMBI.com. This is John. This report is for the 23rd. I had some technical issues last night trying to get my system back up and running, but was able to do it. Windows updates, I'm telling you. I know I mentioned on the Skype chat, but you just sometimes want to vent. But the market is definitely venting. Every time we're getting to the baseline here, ABM, we're bouncing right off of it back to the relative new high area. We're not exactly crushing it here, but it's a lot tougher market rise, particularly when you don't have any short participation to drive to new highs. That's the particular difficulty at this particular point. We're right at a orange steel crossover, so this could be a little bit more difficult market-wise. The only advantage you've got here is the fact that green, well over red. Red is continuing to rise, meaning you got long-term buyers still supporting this, even as we head towards the end of the month. So it could potentially bode well. Of course, the shake off of the potential impeachment, fake news, to coin a term there, really not going to impact the market much because not much is going to come of it. It's just political nonsense. Key is they're going to be watching what happens with the races and whether or not any paralysis is going to take place or a continuation of the policies that are currently going. But despite that, a growing economy, growing multiple. That's just the way it works. NQ making slight improvement, getting closer to the relationship of where the S&P is. So it's that evening out that will certainly help things. You can see bright orange rising here. Again, as I said, even for the S&P, if we go back to it, you really need to see this. Okay, the orange is kind of flattening here, but you need a pivot down to really get a spike. I don't know that there's enough left at the end of this month to drive that. The euro certainly pushing back above the upside of the band that we had right here makes a big difference for it. But you can see it's gotten a little bit extended and probably has to come back at least to 50% pullback of this setup, and not to mention even a trip back down to the lows to revisit that dip below the red line. But for now, it's getting bolstered, and still flight to quality. It's crazy to see people jumping into that treasury where the yields are, given what you can see from inflation and that, and the expectation the Fed is even going to raise rates. Talked about it again. So, and oil making a big jump in this again, the hedge. There it is. That's your inflation hedge, and that's where it's rising. I don't think we're going to see it in gold anytime soon. It's been a steady, soft climb. This has gotten back into range, but now you can see red extreme, so it's reaching critical point. Now we're going to see whether or not the steel has to dip below 13.5 for there to be any negative consequence to that closing of the giant mouth here, the two narrowing in their range. So there's potentially still more room for gold to continue on this, but not likely that it's sustainable from that standpoint. Intraday was great because we had the big collapse of the white candle, the turnaround buy, very strong, nice, rolling through. We ended up with gold below the 50%. It only was able to dip down to the 23% and popped right back from there. And then once you got over that 50, still retraced a little bit because of that rising Azure one there, but that completely reset the shakeout. And then started a whole new run. We ended up with positive extreme, which meant this level would get retraced right down here. And that didn't take long for that to happen. We started to see a rise, and we finally got plus 13 by the time it was here. Not a whole lot of range for it, but you got to take what you can get when it gives you what you got. So in this particular case, that's all you were going to get from it, and that's all it gave. We still have a few others that are back here, and an expectation that we should come back in any decent sell to the white level here, slightly above that 28.45 if we actually put the line there. 47 would be the open. 48.50 would be the reasonable expectation. So that's decent from here, but overall things look pretty stable. There's not a whole lot of clamor, much to do about nothing, and we're getting decent ranges. I mean, these are still maintaining the mid upper 20s. In this case, now we have this compression, so we're likely to blow out from that one as well. So that's what I'd be looking for, and continuing to follow longs above that 50% and or longs that produce any reasonable DOC setups earlier than that. Otherwise, you could take sell signals just as easily. I don't see a problem with that in either way. There are certain times where it looks like things are trending in a direction, but here we've just got nice, gentle chop, which is perfect. That's exactly what the market should be doing. Mean reverting, rising, coming back, rising, coming back, and then overall is still making a gentle climb. That'll do it for the basics. As always, though, trade well. We will talk again later, and I will put up any relevant charts on the Skype chat.